Hello traders, welcome to the second part in our mini market structure principles and trading course. Again, this is just a special thing I'm making for YouTube. It's going to be a 4-part series just talking about the principles of how to read price action. Basically just a naked chart, no indicators, not even volume profile or anything. We're just going to see how markets behave and how we can interpret what price is doing. Okay, so if you haven't done so yet, make sure to subscribe, thumbs up, comments, etc., all that good stuff to help the channel and the project keep going. And so in part number 1, I gave a brief introduction into just principles of market structure. So now let me just bring in my whiteboard for a second. Okay, so we just talked about in general, when you have trending markets, let's say we're in an uptrend, basically you have a market, and obviously it's never going to look as nice as this. Like, this is just a way to visually get a good idea of it, but obviously we know this is going to look probably a little different and harder to read in real life. But anyway, so in a uptrend, we have consistent higher lows and higher highs forming. Sometimes we can even have, like on an ascending triangle, we could even have price compressing into a level, but we are making, in this case, higher lows, which is a bullish sign. But normally if we're in a full-on uptrend, we're going to have higher highs, higher lows, and the previous swing highs are just going to be constantly getting broken as price is just making new higher levels. Okay, so what we're going to focus on now in this particular video is, once we have a breakout, a confirmed close through a level, how do we anticipate, or how can we position ourselves into a pullback to get in with the trend? Okay, so this particular lesson is going to be focused on how can we get into uptrends, meaning how do we catch retracements in an uptrend. Okay, and remember what I said last time on the market structure introductory video. If we have, let's say, a swing high like this, and we have a candle like this, let's say here with a little wick, and then we come back up and we have a candle which just has a big wick, and we wick through this level, but we close back below it. For me, this is not a valid breakout. This is basically what some people call a swing failure, a fake out, a deviation, etc. Because basically we did go over this and we tapped all the liquidity and the resting orders that were above this swing high. Because as you know, when you're trading, people that went short here, most likely everyone has their orders to buy back their position to close their shorts up here. So this is what people call engineering liquidity, where market just taps through an important significant level and closes back inside. In this case, this is a bearish signal. So for me, I do not consider this a bullish market structure break. What we want to see is market come up and then have, if you have a candle like this here, you want to have a solid candle closing above this swing. And now comes the other question. Okay, what about time frames? Well, we're going to focus specifically on the trading time frame that we use. If this is the 1-hour chart, then if I'm swing trading and I'm looking for entries on the 1-hour time frame, I want to see a 1-hour candle close through this significant swing, and then I will consider that, broken. Or if I'm swinging in the daily time frame, I want to see a daily candle close through this high, and then I consider that a bullish break into continuation for the uptrend, and then that's where I then start making my plans of what do I do on the pullbacks. Okay, so that was just a little refresher. So on this course or this lesson, we're gonna focus on two setups. I was actually gonna thinking of doing this in two separate lessons, but they're so related that I think it's just easier to just do it all together. So let's say we're coming on an uptrend and we're just continuing, or we're coming on a downtrend, and then this is how we can also spot a bottoming structure in a downtrend and a change in trend. Let's say we are on a daily time frame. Let's say we're swing trading on the daily. Okay, so market is coming in a downtrend right here. We make a new lower low, then we make a lower high, we come down, and now here is where things start getting interesting, because market is failing to make a new lower low. We start pushing up, but still, until this previous swing high, it's violated or broken to the upside, we cannot say that this is officially changing trend, because this could perfectly just retrace and then do like this and then just continue down. This is pretty much what we would just consider a complex pullback, basically just a pullback made up of several different legs before we break down into the level and just continue. Okay, so until I see a solid daily candle close through here, I don't consider this to be broken to the upside. Now there's people even that want a second confirmation. Some people want to see a close through a previous high, and then they want to see a confirmed higher low, and once they have those two elements, that for them is enough confirmation that this trend has now changed, and now they're starting to look to get long. Okay, in this case, we're pretty much just looking for one confirmation, which will be the break above the previous swing high, and in this case we pay extra attention to the swing level. Okay, so this is why this is called bullish market structure break and broken swing retest. So the first strategy would be, once you have the confirmed breakout, you're looking to get long at the same level as the broken swing that you had. Now sometimes, and this is what I was saying, you may have something like this. So you may have two swing levels, and I'm going to go over this later. We're going to see some examples. So sometimes you have several levels, but in this case we're talking about just the first significant last, in this case the last lower high that we broke to the upside. Okay, so that will be your entry. Now, what is the main problem for me with this? Well, this is a pretty aggressive type of entry, because you're literally just going into a previous resistance broken. Now you expect support, but where do you define your risk? If you go here, where do you put your stop loss? The most logical place would be below the last significant swing low. But unless you expect this market to really trend for a long time, or if you're going to do like a swing trade or something, from here to here, this could be like a really wide stop loss that you're going to need. But like I said, if you have a more higher time frame conviction, if you're more like swing trading and you're okay with placing this because you expect your reward to be at least 2-to-1 or 3-to-1, etc., well then that's obviously perfectly fine, but you always want to use a protection. So then that leads us to the next type, which is basically the same concept. We're breaking the previous significant lower high in this case, but now we're expecting a deeper pullback. a gap fill retest. As you know, I love common gaps. Basically, common gaps is when you have markets that have an impulsive move and they leave just a one-sided action, and then these areas are always very susceptible to getting filled back in. So in this case, with a bullish market structure break and a gap retest, what we're doing is expecting a deeper pullback. Okay, this is also where, and I go over this in my Fibonacci and market structure course, people that like to use fib levels would then anchor their fibs here, and then they would anchor it to the top of the swing, and then you look for like a nice pullback around the 0.68, 0.50, 0.78, etc. And that's how you can use some confluence as well with Fibonacci. But the main thing, as you can see, the two types of pullback stand that we're looking for bullish is basically going to be, we expect either a bounce at the previous broken high or deeper down into the last consolidation or the last cluster of candles that led to the impulsive move that caused the market structure break. And in this case, we're expecting a higher low to form. So now we have a higher high, higher low, and then we expect a nice uptrend to start. And the advantage with the gap fill retest setup is that you can more clearly define your risk, because now instead of going here and your stop loss being here, this is your invalidation below the significant swing low and below the consolidation that led to the gap. In this case, if you get in more towards the last cluster, you can have a much tighter risk, and then you can get much better risk rewards in your trades. Okay, but I want you to think of this, you almost have to think of this as a zone. You need to be ready for price to potentially bounce from the previous high, but that there's also a chance that you're gonna have to work pretty much within this area. This is sort of your potential bounce area, and your focus again is gonna always be on the previous broken swing highs in case of a bullish break, and then into the pullback, into the gap fill, and into the last cluster, order block, whatever you want to call it, that caused the impulsive move that broke structure. Okay, so that's pretty much the principles in theory. And now let's just go quickly into charts just to see some examples. I don't want to make this video too long. Here we have the S&P 500 daily chart, and we've had a really nice example here that's been going on in the last few days. So as you can see, let's do an analysis. This is a daily chart. We're coming in a big downtrend. We're making lower highs, lower lows, and then right here, this is where we spot something going on, because we have here what we defined as a fake out or a swing failure. We had this swing low, market came down, this candle wicked down. There was a lot of people, I'm sure, trapped that were shorting right here, thinking this was just a breakout trade, people going with momentum here. But then the candle reverses and we have a bullish hammer candle. Okay, so now this puts us in attention that there could potentially be some kind of change here. Now, we're not going to start assuming any bullish scenarios until we break this previous swing high. And you can see market comes up here, we do a little pullback, okay, and then right here on this leg, we officially break out. And let me just clean the screen so you can see how right here we break out and we broke this swing high and this swing high. So now that we've broken the last significant lower high that we had, now we start getting into bullish pullback mode. And then here is the example. So first of all, over here, and let me actually put this here. So we have I like to mark the two swing highs that we broke, and then I also mark the last consolidation or the bullish block. Basically, in this case, this was the last two bearish candles, which you can see are, I marked both of them together because they are overlapping. So then this is my area, and our risk is clearly defined right here. This is our invalidation. If price would come back and close through here again, now we've broken this and we've officially invalidated any bullish scenario for the moment, okay? But so here you can see we have the breakout officially confirmed on this candle, and now we pay attention to the two previous swings. And as you can see, normally if you have a breakout from a level but it's just not very strong through, there's a higher chance you're going to get a deeper pullback, and you're not just going to go like this and bounce from here. If it's very close from the candle close into the swing level, it's very, unless it's extremely a lot of momentum and strength, markets are going to have a little bit of a deeper pullback. And you can see right here, we pull back into our demand area and then we take off again, you know. And if we want to just pull up a Fibonacci just for the hell of it, just to see, you can see it was pretty much a pullback right into the 50% fib level. Okay, then we pull back here, we now have higher lows over here. This gives us a little caution. This is not a very significant swing level. Like, I almost would not consider this a swing high. If we go into a lower time frame, then yes, we could say this is a lower swing high. But you can see how we pull back here, and then this candle just immediately breaks through these two levels now. So now again, we're continuing now. So now we broke above this and we broke above this again. So now we continue on our hunt for pullbacks. And in this case, you can see how we had a pullback. This one was a little bit deeper and higher. The more time we spend above without coming back, then it increases the chances that the highest swing level might hold. And you can see right here, we just had this wick into the swing level, and market is now continuing really nicely. So now we're paying attention to this swing high, see if we get a breakout, etc., you know, or possibly if we do like this, we could go into this, etc. Okay, but you can see how if this swing high would not have held, then our next idea is, okay, we can pull back into here and bounce, or we know we have this whole demand bullish block here. We could potentially come all the way into here. As long as we don't have a daily close down here, we are good to go, and we are looking for longs. And same thing, you can put your Fibonacci from here up to here and then just look for fib levels, etc. But you can see we still have this gap that hasn't been filled back, so that's still open into the future. But that's pretty much a really nice example of how we can look for pullbacks into both setups that we talked about, the bullish market structure break and a broken swing retest, or the bullish market structure break and the gap fill retest. Okay, and I think I have a couple of more. Let's see right here. Okay, for example, here we have a chart on crude oil. You can see that this rally was short-lived because we actually came and just invalidated everything. But at the time that I annotated this slide, we were right around here. And so you can see the same thing. We're coming in a downtrend, break below, lower low, come back. This looks like a lower high, and then we get this candle right here. Break out from here. Then on the next candle, we break this previous swing high. And then on this candle, we break this previous significant swing high. So then the same thing. I pull out lines at the broken swing levels, and then I also mark my demand cluster from pretty much in this time frame on the daily chart, the last pullback before the impulsive move that broke all this previous swing highs. And you can see how market came back down, broke first one, second one a little deeper in a pullback, and then finally we did get a nice retrace all the way back here into the gap fill, into our last cluster, and then we took off from there. Okay, and then you can see right here, this pretty much just faked out this high and closed back in, and then that started a pullback. And then, you know, we had this support, and once we had this right here, that was clear confirmation that now market structure shifted to the downside. And let me see which one else. Here on gold, same thing we had, similar to the S&P 500. We had a downtrend coming here. We had a pullback. We did break above this little swing level, but right here we met previous resistance, double top, pull back. This swing level holding, held, and then right here we have this breakout from here, and then this breakout back over, and a nice clear break of these levels. So now what we're paying attention here is this level, and then below that we would be looking at this previous swing highs, and then our demand block. You can see we are bouncing off of the top of the broken swing level, but there's potential for this to come down, you know, and retest this previous resistance, now potentially support, or deeper down into the last cluster that started the whole up move that broke the previous swing high. And our clear invalidation would be right below this cluster that caused the gap up. Okay, so that's pretty much for the video. Hope you guys enjoyed. Next video is going to be similar, but we're going to be talking now about the bearish or the downside. So we're going to look into bearish market structure breaks with broken support swing retests, and also with pullbacks into bearish blocks into gap fills. Okay, so that'll be next time. Have a great week, and I'll see you all in the next video.